Hello everyone. Today we shall be discussing about wealth tax. We shall see why wealth tax is a bad idea and why wealth tax doesn't work. In the current monetary setup, we shall be using the concepts of modern monetary theory to understand it. What are going to be the main points of the presentation? Essentially, we shall be seeing briefly about the real role of taxes in the economy. Having said that, it will be prudent for you to check out the presentations on role of taxes as well as modern monetary theory to better appreciate this presentation. The links would be given in the description of this video. Also, we'll be seeing what wealth tax is and why wealth tax doesn't work or why wealth tax won't work. And hence, we'll see and conclude how wealth tax is a bad idea for the economy. Now, under MMT, we see that government has a monopoly over money. Money is not a store of value for the government, unlike for us. And so taxes in reality are not a tool for revenue collection. You'll see more details of this again in the MMT presentation or in the role of taxes presentations. Here I will just be briefly indicating about the real role of taxes for the government in the economy. So what exactly are the role of taxes? Let's have a look quickly. Now, role of taxes in the economy under the current monetary setup is taxes maintains a monopoly of government over money in the economy. It controls the demand. It's a tool to control demand in the economy. Removing taxes completely would be politically imprudent for the government. Again, tax is a tool for wealth transfer by the government in the economy and the tool to control production choices of the economy in the hands of the government. Again, check the presentation on the role of taxes for more details. Now, what's a wealth tax? A wealth tax is a tax paid by a person in proportion to his wealth or assets that he or she may own. Now, what's the aim of a wealth tax? Essentially, let's say a person has some assets, houses. Enter the government and imposes a wealth tax on it. So he would have to shell out some money to the government, which the government indirectly gives to a third person. So wealth tax is nothing, and the aim of wealth tax is nothing but essentially a wealth transfer that the government makes from person A to person B, at least initially. Now let's see the effects of wealth tax on the economy. For a person who has to give wealth tax, his overall income would decline, and certainly his overall asset value or investment value would decline. That would mean the overall investment value in the economy would take a knock down. Also, on the high-end consumption, because wealth tax is imposed on the well-to-do people, what would be the impact on the high-end consumption? Well, the high-end consumption may increase because now the wealthy people would be less inclined to save their money and build up their wealth to be taxed by the government. Or if the person is not really very wealthy but somewhere in middle, then his income may not be sufficient to give the wealth tax and also consume a lot. So the consumption for him can actually come down. Hence, it's not very clear the effect of wealth tax would have on the high-end consumption of the economy. For the person who is the beneficiary of the wealth tax, his demand for goods and services would definitely increase since he has more money to spend now. That would mean that since the overall demand in the economy has increased while the investment and hence the supply has gone down, that would mean that inflation has seen will see a lock towards higher. So inflation in the economy would rise. Let's have a look at the second factors. Now, let's say the person has taken some loan from the bank. Because of the wealth tax, the investment value has declined. Also, some of the demand patterns have changed, so his industry or his investment can become a malinvestment. In a second scenario, since the real estate investment values or his asset investment values have now declined because of wealth tax, hence we see in both cases for the bank there would be or there can be some fall in the credit provided by the bank and hence some pressure on the money supply. Which can decline. And so there is a good chance that the amount of bad loans in the economy will go higher because of the wealth tax. So combining the two, what are going to be the effects of wealth tax on the economy? Wealth tax would lead to a reduction in savings and hence investments in the economy. The impact of wealth tax on high-end consumption can be a marginal decrease or even some increase in the economy, as the person might end up saving less and consuming more, the person who has to give that wealth tax, that is. There would certainly be an increase in demand for the lower end goods in the economy. The bank credit would see a decline, and certainly there would be an increase in the bad loans in the economy due to falling collateral values and changing demand patterns. Also, the future credit for new industries would be difficult to get due to this factor. And so, in the worst case scenario, due to the increase in demand while a decline in supply because of falling investments, the economy can see a stagflation like situation at least for some time because of wealth tax. Now, you might just ask then what could be the difference between an income tax and a wealth tax? In the sense that let's say the government increases income tax a bit more than imposing a wealth tax. Now, I'm not advocating increase in income tax at all, but let's just contrast both of them. Now, income tax, as you may know, happens on the current income of a person. So your consumption and savings both decline in some proportion. So let's say your tax increases so your overall take home income declines, and hence your consumption may decline proportionately, and so would be your savings. Wealth tax is actually based on your previous savings or your family savings, and so you might be more inclined towards disposing of your savings or investments. So this leads actually to a greater fall in investments, and you might end up consuming more and saving less overall, again leading to a lower investment in the economy. That means more demand and less investments and supply in the economy because of wealth tax, unlike income tax, which can lead to inflation and worst case stagflation, at least for some time in the economy. The final points before we conclude. While tax anyways is not a source of revenue for the government, but a tool to control demand and supply in the economy and wealth transfer, wealth tax is the worst of those tools. It can lead to decrease in supply while at the same time increase in demand in the economy, so making the overall economy worse off. So thank you very much for watching this presentation. Do subscribe if you like such content, and comment in case of any questions that you may have. Thank you.